Hello, this is Jim Vass from ATB Chartered Accountants. Today I'm talking with Angelo Indurato from Watkins Taylor Stone. Today's topic is debtor insurance. This is something that I don't think there's too many people that know about it. So could you please give me an overview of what is debtor insurance?
Sure, Jim. Look, not a lot of clients take up this. You'd have to be probably a large company in terms of turnover some serious dollars to warrant this. It is not cheap insurance, but what it covers you for is if you've got a supplier, let's say, that owing you money for the business, that you provide them, let's say, some stock, and that business goes insolvent, goes into receivership, and they cannot pay you that money that they owe you. The debtor's insurance would cover you for that payment in terms of that. That's what it is there for. You'd have to do credit checks. The insurer goes through, does an inside check on each of the suppliers and would check how their business is running, and then say, yes, you can do business with them, and then that goes in from there.
So does that policy then cover specific, so if you've got 100 clients that you're dealing with as a business, would that exclude some clients because they don't meet up to do the credit check and include some, or is it a blanket cover for the insured party, whoever they deal with, providing they exercise a certain credit policy that they're going to be covered?
So yeah, the insurance would be, so the insurer would look at all your clients, so all your suppliers. You'd have to provide them with a list in terms of who your suppliers are. They'll go through and do a check. They've got systems, computer-based systems now that's quick, easy. You put down who the details are and they do a quick check on it to make sure, but you'd be listing all your clients down.
Okay. And in the instance then that business being a dynamic world and you acquire a new client, is that then something that you have to notify the insurer that you've got a new client that you're dealing with as well?
Yes, that's correct. So you can nominate. You may not want to specifically. You may know this client is good and you don't want to cover them, so you can pick your clients which ones you do want to include in the cover.
Everybody would love this insurance. I was actually just speaking to a few people this week that have lost $350,000 in bad debts. However, as much as everybody would like to have this policy, typically one of the businesses that these policies are geared to, because obviously the insurers don't want to be paying out willy-nilly to everybody that's got a bad debt on their books.
That's right. So typically a business, you'd be looking at someone that's turned over more than 20 million a year in terms of that. That's just for warrant. You're looking at minimum premiums with the insurer, so you're looking at 10,000 plus for a policy just for the year. That's a minimum premium that you'd be looking at.
And what sort of cover would they give you? Would they give you your debtors cover at any point in time?
And look, again, you'd have to list down who you're looking to supply, who your clients are, and how many you're looking to cover. And then they'll base the insurance and the premium based on that.
Okay. And do they then will they review what your credit policy is and what your credit control procedures are?
Definitely. So they want to know all the information. You need to provide a bit of information on the procedures, how long the credit terms are, and all the information in relation to that. Yeah, definitely.
All right. Very interesting. Thank you, Angelo.
Not a problem.